As of 12:29 p.m. Eastern Time on Tuesday, January 6, 2026, the live stock price for Cyclerion Therapeutics Inc., trading under the ticker symbol CYCN on the NASDAQ, is exactly $1.90 USD. This represents a massive intraday surge of 37.68%, with the stock climbing 0.52 USD from its previous close. This price action is occurring on staggering volume, with over 63 million shares already changing hands today, dwarfing the average daily volume of roughly 374,000. While a 39% jump might lead some to think this is just another volatile penny stock pump, the reality underneath this price movement suggests a much more calculated shift in how the market is valuing the company's clinical path. Most investors looking at the broader market today are likely distracted by the performance of a Tesla stock or wondering if an Apple stock can maintain its current valuation levels. In that context, a microcap biotech firm like Cyclerion often gets overlooked. The common expectation for a company like this, especially one that has seen its market cap hover around $5 million, is that it is simply burning through its remaining capital while waiting for a miracle. However, the reality of today's move is tied to a specific strategic agreement with Medsteer and a clear timeline for their lead program, CY126, which targets treatment-resistant depression. By moving from a general focus on soluble guanylate cyclase stimulators to a concentrated push into neuropsychiatry, Cyclerion is trying to solve a problem where existing treatments have failed millions. This isn't just a random spike. It is a reaction to the company providing a concrete update on its Phase 2 proof-of-concept study and its collaboration to use EEG-guided closed-loop anesthetic delivery. When you spend time on investing sites or scroll through your individual brokerage account, you often see these small biotech companies experience huge swings based on news. For CYCN, the market narrative has been one of survival. The stock has been trading near its 52-week low of $1.16 USD until very recently. For someone using a Fidelity trading platform or a Robinhood app, seeing a stock nearly double in a short window usually triggers a sense of caution. But look at the volume. When 63 million shares move on a company with a float of only about 2.3 million shares, you are seeing massive turnover and likely some heavy institutional or high-frequency participation. It indicates that the previous market expectation of stagnation is being challenged by a new reality where the company has a defined clinical and regulatory path. The collaboration with Medsteer is the primary driver here. They are integrating software agents with real-time patient feedback to improve clinical outcomes in depression treatment. This is a technical move that reduces the uncertainty surrounding drug delivery. If you are used to self-investing, or perhaps you utilize Schwab Intelligent Portfolios to manage your larger holdings, you know that risk management is about reducing variables. Cyclerion is attempting to do exactly that by using validated technology to support its drug candidate. This move has pushed the stock back toward its long-term moving average of $1.48 USD and well beyond it today, showing that the appetite for high-risk, high-reward biotech is returning as investors seek out the next NVIDIA stock in the healthcare sector. It is worth noting that while the retail crowd on a SoFi trading platform or using Robinhood fractional shares might be chasing the momentum, the professional side of the market is looking at the March 3, 2026 earnings date and the 2026 clinical trial start. Institutional activity in CYCN has been relatively quiet, with names like Tyndall Capital and Vanguard Group holding small percentages. However, the insider ownership sits at a substantial 31%. When the people running the company own nearly a third of it, their interests are usually aligned with seeing the stock price reflect actual clinical progress, rather than just speculative noise. This is the kind of detail you look for when providing investment help to someone who wants to understand why a $5 million company is suddenly the talk of the day. If we look at the broader macro environment, online investing has become increasingly focused on specialized sectors. While most people are watching an Nvidia stock reach for new heights, the biotech sector has been quietly restructuring. For those using an interactive brokers platform to trade more complex strategies, the volatility in CYCN offers a different kind of opportunity. The company has a current ratio of over 5, which means they have enough short-term assets to cover their liabilities. This is a crucial piece of the puzzle, because many small biotechs fail not because their science is bad, but because they run out of liquidity. Cyclerion seems to have positioned themselves to actually reach their 2026 goals without the immediate threat of insolvency that usually haunts companies in this price range. Before we go any further, I want to hear your thoughts on this type of high volatility play. Comment below how many shares of CYCN you currently hold, or if you prefer sticking to larger names like an Apple stock during times of market uncertainty. Your feedback helps everyone understand the current sentiment across different types of portfolios. Now, to understand where we are going, we have to look at what this company actually does. Cyclerion was spun off from Ironwood Pharmaceuticals back in 2019. Its original goal was to develop stimulators for various serious diseases, but it recently underwent a complete relaunch. They sold off several of their assets to other firms, like Tesento, to narrow their focus. Today, their foundational candidate is CY126. They are using common anesthetic agents and pairing them with a proprietary delivery system to essentially resynchronize brain activity in people who do not respond to traditional antidepressants. The business model is now lean, moving toward a proof of concept in Australia to take advantage of faster regulatory pathways before coming back to the US for an IND submission. This is a smart move for a microcap company because it saves time and preserves their limited capital. The tension in the CYCN story is whether they can actually execute on this Phase 2 trial. The expectation is that clinical trials are long, expensive, and often end in failure. The reality Cyclerion is presenting is a tech-enabled approach that leverages existing, well-understood drugs in a new way. This significantly de-risks the biological side of the equation, as they aren't trying to discover a completely unknown molecule. Instead, they are refining the delivery and monitoring of known agents. If you manage your own wealth through a Fidelity mobile app or a SoFi Invest account, you recognize that this repurposing strategy is often much more efficient than traditional drug discovery. Looking forward, the catalyst to watch is the patient enrollment in Australia scheduled for the second half of 2026. Until then, the stock will likely trade on news regarding their device integration and any further partnerships. We are seeing a shift where the market is willing to reward companies that have a clear, specialized niche rather than those trying to be everything to everyone. The volatility we see today at $1.90 USD is a sign that the market is finally paying attention to the relaunch that happened last year. In the world of online investing, it's easy to get caught up in the hype of a Robinhood investments trend or a viral post about a crypto asset. But for a professional investor using an interactive broker's account, the play here is about the discrepancy between a $5 million valuation and the potential of a successful depression treatment. If the data from 2027 shows any sign of success, the current price will look like a footnote. However, the risks are real. The stock is still down significantly from its 52-week high of $6.25 USD, and it has a lot of ground to make up. The current momentum is strong, but biotech is notorious for giving back gains if a secondary offering is announced to raise more capital. If you are currently building an intelligent portfolio or using Fidelity Wealth Management services, you might find that small allocations to high-growth biotech can provide a necessary balance to the more stable moves of a Tesla stock or your various Fidelity ETFs. The key is knowing when the market reality has caught up to the expectations. Today, the reality is that Cyclerion has a partner, a plan, and a specific date in sight. That has been enough to trigger a massive short squeeze or a significant reevaluation by the market. For those who use Fidelity IRAs or SoFi active investing to build long-term wealth, the takeaway from today's move in CYCN is that the market still rewards innovation in underserved medical fields. Even as larger tech stocks dominate the headlines, these small-cap pharmaceutical companies provide the kind of asymmetric upside that many investors crave. The technical signals are currently pointing toward a buy signal from the short-term moving average, although the long-term averages still suggest caution. This creates a classic setup where the stock is trying to break out